NVIDIA and AMD have been two of the hottest technology stocks of 2020. Both stocks more than doubled, and gained roughly 50%. But should investors expect NVIDIA and AMD to continue outperforming the broader market next year? Let's take a fresh look at both chipmakers, and see if one is a better buy than the other. The key differences between NVIDIA and AMD. NVIDIA and AMD both sell GPUs and CPUs. NVIDIA generates most of its revenue from discrete GPUs for PCs and data centers. AMD generates more than two-thirds of its revenue from its CPUs for PCs and discrete GPUs. It mainly competes against Intel and NVIDIA, respectively, in those two markets. The rest of AMD's revenue mainly comes from its CPUs for data centers, which compete against Intel's Xeons, and its custom chips for Sony and Microsoft's latest consoles. AMD agreed to buy Xilinx, a maker of FPGAs, earlier this year. That deal hasn't closed yet, but it would counter Intel's takeover of Xilinx's rival Altera in 2015. Both acquisitions complement AMD and Intel's data center businesses, since FPGAs can be reprogrammed to complement CPUs and accelerate demanding tasks like AI and machine learning. Which company is growing faster? NVIDIA's revenue and adjusted EPS fell 7% and 13% respectively in fiscal 2020, which ended on January 26. Those declines were mainly caused by the cryptocurrency bubble, which popped last year and caused miners to flood the market with cheap second-hand GPUs. But in the first 9 months of fiscal 2021, NVIDIA's revenue soared 49% year-over-year as sales of its gaming and data center chips surged. That growth offset the pandemic-induced declines at its smaller automotive and professional visualization businesses. NVIDIA gross margin dipped slightly during that period, due to its takeover of Mellanox and a higher mix of lower-margin gaming GPUs, but its net income still grew 55%. Analysts expect its revenue and earnings to rise 51% and 68%, respectively, for the full year. Next year, its revenue and earnings are both expected to rise 21% as the pandemic-related tailwinds wane. AMD's revenue and adjusted EPS rose 4% and 39% respectively last year. Its GPU business faced similar cryptocurrency issues as NVIDIA, and decelerating console sales throttled its sales of semi-custom chips. But in the first 9 months of 2020, AMD's revenue rose 42% year-over-year as it sold more CPUs and GPUs for the gaming, PC, and data center markets. Its gross margin improved, and its net income more than quadrupled. Analysts expect AMD's revenue and adjusted earnings to grow 42% and 92%, respectively, this year. Next year, they expect its revenue and earnings to grow 27% and 49%, respectively, as it continues to keep pace with NVIDIA and gain ground against Intel. Before we announce the winner, don't forget to like and subscribe to the channel. And the winner is AMD. Both stocks look pricey at about 50 times forward earnings, but AMD is arguably more appealing than NVIDIA, for 3 reasons. First, AMD has less exposure than NVIDIA to the macro-sensitive automotive and enterprise sectors. Second, it will likely keep growing as long as Intel's comedy of errors continues. Lastly, AMD's chips power the PS5 and Xbox Series X and S consoles, which are all in high demand this holiday season. Those catalysts, along with its better diversified portfolio, make AMD a slightly better pick than NVIDIA right now. Both stocks should continue to outperform other slower growth chip stocks, but investors shouldn't expect either stock to double again next year. Thank you for watching. Leave a comment with what stocks you want to see next.